And there's already been a lot of action, particularly on Monday. Monday was a crazy day where just about everything rallied, even crypto-related stocks, and Bitcoin managed to rally on Monday, although the crypto-related stocks gave most, if not all of it, back today, with some of the biggest names in the industry hitting new lows on the year today. But the biggest winner on Monday were the gold mining stocks. Huge day. I think the GDX and GDXJ were each up about 5% on the day, a little bit more. A mixed bag today. Some stocks continued to rally, a little bit of a pullback. The price of gold now is back above 4,100. Let me give a quick check where it is here on Tuesday night. 41.40. Up another $11 from today. And silver is back at 51.5. So both silver holding nicely above 50, gold solidly above 4,000. You know, the GDX and GDXJ are still 9% and 12% off their highs as far as how much they'd have to rally. But some of the stocks, including some of the ones that we own in our dividend payer and value strategy. We own a few mining stocks in those strategies. It's not my gold strategy or my gold fund, but we still have a few miners. And two of the ones that we own are Barrick Gold and IM Gold. And both of those stocks today hit new highs for the move. So some of the names have already started to hit new highs.
Peter Schiff breaks down the massive gold and silver rally, with gold blasting past $4,100 and silver above $50 as miners jump 5% in a day. He says the Fed will cut rates again on December 10th, and that Trump's likely Fed pick, Kevin Hassett, will push the dollar lower and gold higher. Schiff warns Japan's bond crisis could force selling of U.S. Treasuries, shaking American markets. He also notes Trump is rolling back tariffs. Bitcoin is collapsing while gold leads by 50% this year, and the housing market is freezing with delistings at 8-year highs. His message: smart money is leaving crypto for precious metals before new record highs. Thanks for watching. Subscribe to Fine Metals for more updates.
Another reason that I think investors are buying gold again and why they're going to be selling the dollar is the odds shot up for Kevin Hassett to be the next Fed chair. And if you look at Polymarket, he's now in first place with a 55% chance of being Trump's pick to replace Too-Late Powell. 55%. The number two guy is at 21%, Christopher Waller, and then Kevin Walsh is down at 14%. So it's really narrowed down to those three guys, and Kevin Hassett is now the odds-on favorite to be the next Fed chairman. And of all of the candidates that Trump was considering for the job, Hassett is the most dovish. But not only is he likely the most dovish, but he's also likely to do what the president wants. He's probably the most loyal Trump supporter, being, his chief economic advisor. But I think that if Trump wants to put a puppet as Fed chairman so he can pull the strings, Kevin Hassett is the puppet that he's going to pick. So this, I think, is very negative for the dollar. It means a weaker dollar. It means higher inflation, and it means, higher gold and silver prices. I mean, that's why the rally continues. Gold's now up $17, up another $6 from when I mentioned it before the commercial break. So we're now at 41.47, and silver is now above 51.50. It was actually just below when I mentioned it. So it's up 11 cents. So the markets are very strong, and that is one of the reasons for this. The gold and silver stocks are going to hit new highs before gold makes a new high. Maybe not silver. Silver could take out the high, which was 54.40-ish before gold. In fact, I think silver will make a new high before gold, but gold will make a new high probably before the end of the year. And what is going to be driving gold to record highs and silver to record highs and gold and silver stocks to new highs is going to be the Fed. Remember, we have one more FOMC meeting. I believe it's scheduled for December 10th. And that is actually the day that I'm going to be flying back to the U.S. from Amsterdam. I will be speaking at a gold conference there. If I have any Dutch fans who are going to be in Amsterdam, they could come see me. I am going to Amsterdam directly from Dubai, where I'm going to be having that debate conversation with CZ on tokenized gold versus Bitcoin. So I'm going to be in flight when that FOMC decision comes out. I mean, I'll try, I forget if I'm going to have any live television, on the plane. But I'll be able to talk about it probably the following day, but I'm not going to really be seeing it live. But that's the date, I think it is the 10th. And I know that because I got an email from Fox Business, Liz Clayman, who always likes to invite me on when we have the FOMC meetings. I got the invite, but had to turn it down because of, my travel plans. But I believe the Fed is going to cut rates again. And if you recall, the last FOMC meeting, that's when Powell threw a monkey wrench into the whole, rate cut, narrative by kind of saying he didn't really know what he was going to do, that it was kind of like a coin toss, that, they could cut rates, they could leave them the same. They really didn't know. It kind of depended on the data. And that really pulled the rug out from under these expectations. And the markets went down. They were nervous about it. And if you recall what I said on my podcast, I said I didn't believe the Fed. I didn't believe that they weren't intending to cut rates. I think they absolutely knew that they were going to cut rates again. They just didn't want to come out and admit that. They wanted to pretend to the markets that it's not a sure thing, that it's not a lock, and that, they're weighing the evidence, knowing that it really didn't matter because the economy is much weaker than they are letting on. And of course, there's a lot of behind the scenes pressure from the Trump administration. So they're getting a cut. But what helped revive the markets over the last couple of days was FOMC members coming out, including again today, and expressing that they want to cut rates. Houses that were delisted, right? Delistings where a home gets put up for sale and then it doesn't sell, and so the seller takes the listing down, right? So the house is available for sale, nobody buys it, and then the seller says, I'm taking it off the market. Those delistings have just hit like a record high, or 8-year high, not a record high, but it's the 8-year high. Now, why are houses not selling? Because they're too expensive, right? That's why they're not selling. People can't afford to buy them. Now, if the government sits back and does nothing, the housing affordability crisis is going to solve itself because housing prices are going to collapse. They will collapse to the point where they're affordable. That's the solution, right? So you won't have to worry that mortgage rates are high because you won't have to borrow that much money to buy the house because the price is going to be a lot lower. But that is the one thing that the government is trying to prevent from happening, because the government artificially boosted home prices with cheap money. But now, if we lose the home equity and the collateral for all these mortgages, Fannie and Freddie are broke again. It's another housing crisis. So the government, they talk out of both sides of their mouth. They complain about the housing affordability problem, but everything they're doing is trying to keep housing prices from becoming affordable, because the last thing they want is the prices to come down. Anyway, stick around. We got a quick commercial break, and I'll be right back. I got a lot more to discuss on this Thanksgiving week. Reacting to the economic data, the consumer sentiment numbers came out today. We're getting more economic data, and it sank to a 7-month low. In fact, in October, the reading was 94.6, and the reading collapsed in November all the way down to 88.7. So that's a big monthly drop in consumer sentiment. And I think a lot of this is being driven by inflation. Despite the fact that the president seems to believe that inflation is under control or non-existent, everybody is talking about the affordability crisis, whether it's housing, whether it's healthcare. It's all about things are not affordable anymore. People have a hard time making ends meet. And of course they have a hard time making ends meet because of all the inflation that the government has created. I think it's very rich that both the Democrats and the Republicans agree that we have this affordability crisis. In fact, it was that issue that propelled Mandami into the mayor's office in New York City, because he was playing into the fact that everything was too expensive and that the government was going to help lower the cost of living. But of course, it's the government that raised the cost of living in the first place. And it's both Republicans and the Democrats that are directly responsible for the affordability crisis. Because the reason that things are so expensive is because both political parties have decided to fund government spending through inflation. There is no appetite at all for reducing government spending and balancing the budget. Both parties want to continue to spend money that the government does not collect in taxes. So where does that money come from, right? It has to come from somewhere. The air coming out of the Bitcoin bubble and the crypto bubble. And, no better example of what's going on there is in the stocks, these companies. And MicroStrategy, a warning, because I think it was Morgan Stanley that came out and said, there's a good chance that the indexes, the global stock market indexes, like the world MRCI index, that they're going to kick MicroStrategy stock out of the index. And that means that companies that are tied to those indexes that now own MicroStrategy or strategy. I keep using the old name. I joke they should have changed the name to Micro, because that's where the stock is going, as opposed to strategy. I saw some joke online where they named the company Tragedy instead of strategy. A strategy. Tragedy is probably another good name for the company. But anyway, it's strategy. But if strategy is kicked out of these indexes, that means a lot of index funds that bought it are going to sell it. Now, I 100% agree that strategy never should have been added to those index funds in the first place, because it's not a viable business. I mean, there is some kind of software business buried beneath that Bitcoin balance sheet, but it is so small, it is inconsequential to the stock. All MicroStrategy is a levered Bitcoin ETF. And why should an ETF be in an index of stocks, right? It shouldn't be. And if you are trying to buy stocks, which are operating businesses, right, that are expected to make profits by producing goods or performing services, you shouldn't be forced to buy MicroStrategy just because it's been added to an index that it never should have been a part of. And so I think it's a smart move to get rid of it. But, that will also help undercut its prestige and whatever demand there was for its shares. But, I have challenged Michael Saylor. He won't accept the challenge to debate the very premise of his business. I think the whole business model is a fraud. I think it's a sham of a company, and it eventually has to implode until the Fed came in with a rescue. And, these statements may very well have been damage control, as FOMC members were worried about the markets and they thought they needed to, throw it a lifeline. But I mentioned yields in Japan had moved above 1.8 on the 10-year. They backed down. Now we're back above 1.8. 1.81 is what I'm looking at now. This is a new 20-year or so high as we continue to march towards, and then I believe through, 2% yields. Now, 2% yield on a 10-year may not sound like a lot, but in the land of the rising sun, it is when you're used to, or they were used to, yields of 25 to 50 basis points. So this is a huge move, and it's not going to stop at a round number. But I think that round number is going to be a significant event, because the cost in Japan to the government of financing this massive debt is going to be significant. And I mentioned, yes, it was on the Schiff Gold market wrap, that what I think may happen in Japan is that to finance the massive stimulus plan that was just announced, that they will sell Treasuries to pay for it rather than increasing the issuance of JGBs, because the Bank of Japan or the government indicated that there would be no increase in the issuance despite this huge stimulus package that needs to be paid for. If they're smart, or I know they're smart, but if they do the right thing, they will sell U.S. Treasuries, which is going to be very problematic. But of course, that's another reason why the Fed is going to have to go back to quantitative easing and easy policy to try to offset the torpedo that the Japanese will be launching our way should they decide to start selling U.S. Treasuries, because they're now the number one holder. They're more than Japan. China rather. China was, I think, number one, but they've stopped buying. And the economy is weakening, right? They are, trying to figure out what to do. Trump is starting to roll back tariffs left and right, recognizing that they're not doing what he had hoped, but the economy is in trouble. He's trying to find ways to lower prices because affordability is the big problem, and he worsened that problem with his tariffs. And so now he's trying to reduce prices by removing tariffs without admitting that the tariffs are causing prices to be higher, which is obvious, because if removing tariffs lowers prices, then imposing them has to raise prices. It's impossible for that not to be the case. I again encouraged everybody to go out and buy Bitcoin over the weekend. I mean, not Bitcoin, to go out and buy gold and silver over the weekend, because I thought we would have a big move up on Monday. And sure enough, we had a huge move up on Monday. And so if I don't do another one, just keep on buying. Buy over the Thanksgiving holiday. Buy over the weekend. You want to get more along into these new highs. Look at the gold fund, the Euro Pacific Gold Fund, EPGIX. We still have a ways to go now, at least a 10% rally to make a new high. And I think we're going to do that before the end of the year. So you still have a Christmas gift opportunity coming up